Not one country will be spared from the fire and brimstone that once reigned on the cities of Sodom and Gomorrah as punishment of God for immoral behavior. So that's the monetary system we have. Yeah, it's immoral. Tuesday, April 15th, 2025, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at a very technical term, but I hope to make it simple for you to understand, and it's something called backwardation. And we're going to look at why permanent backwardation could be a big red flag, a big a loud alarm for the irredeemable fiat currency system that we've been under since August 15th, 1971. Yes, it could be the end of the current monetary system, and there are a lot of symptoms out there that are pointing to that. And the other thing that I think is putting the system under threat is the fact that the world's trading system is falling apart. You could say that it's on purpose and that it's President Trump's fault, but there's something definitely wrong. And we're going to refer to Professor Antal Ficchetti's work, the late Professor Ficchetty of Gold Standard University in Canada. And he wrote an article in December 2008 entitled Red Alert, Gold Backwardation. And I'm going to put a link to this article below in the description. You can read the whole thing. But I'm going to summarize it for you and tell you where we are. And also refer to a more recent article from 2 or 3 days ago by David Jensen, who's been on the channel, about silver backwardation. Before I start, I just wanted to thank all of you again for the interest in the channel. If you're new to the channel and haven't subscribed to the channel yet, make sure you do, and make sure you hit the little notification bell to be notified of all my new videos. I post a video every day. And yes, thanks again. So, backwardation, I'm going to explain to you what it means, and it's all to do with the futures market. So normally futures market are in contango. Yes, it sounds complicated, but it's very simple. So when you buy a commodity for spot delivery, if you go to the market and you buy coffee, for example, at the futures exchange, you buy the spot contract. You'll get the coffee in 2 days or so, 2 or 3 days, the coffee delivered at a price of, let's say, $10. Could be wrong, the price, but it doesn't matter. It's just for an example. And then if you look at the futures contract, let's say 3 months forward, it's trading like at $11. And why is that? Well, because it's called the cost of carry. It's also the cost of storing the coffee. And the cost of carry adds the cost of storing and the cost of financing, because if you buy a future 3 months forward, you are giving up on 3-month interest that you could earn by putting that money in the bank, right? 3 months, yeah. So that's why there is contango, and that's a normal market. But backwardation happens when there's a severe shortage of a commodity, and you will pay more for the commodity now than you would in the future. That's backwardation. So there's a risk-free trade there, because you can sell your coffee for, let's say, $12 in the spot and buy it in 3 months' time for 10. So you lock in $2. The problem is that you might not get any coffee in 3 months. So that's what backwardation and contango are. For gold and silver, though, it's a different story, because even though one of the qualities of gold is that it's scarce and rare and it's a luxury, it's also at the same time the most abundant commodity. And why is that? Well, because all the gold that's ever been mined, unless it's been lost, let's say through the sinking of a ship and it's at the bottom of the ocean, all the gold that's ever been mined is still above ground. So the stock to flow ratio for gold is, I'm not sure what it is right now, but it's at least 60 years. That means that there's 60 years of gold production above ground. But that in of itself is why gold is so special and why it's money, because it means that the supply of gold doesn't really affect the price. Even if you find a great discovery that can be exploited very quickly, discover your gold, it won't really affect the price that much. During the California gold rush, it did affect the price, local prices in California a bit, but worldwide it didn't. So it should be very rare to have backwardation, especially in gold. Silver as well, even though the stock to flow ratio for silver is lower than gold, but it's still very significant, which means that there's a real problem with the irredeemable dollar system. If people want gold now and the spot price is higher than the futures price. And Professor Facchetti, he explained that in this article that I'm going to put below in the description, and you should read it. It's not long. He explained that, that would signal the end of the irredeemable fiat currency system, especially if the market went into permanent backwardation. And this article was written in December of 2008. And at the time, the gold market was in backwardation. It was the first time it had been in backwardation since the Winnipeg gold futures contract started trading in 1972. That was the first gold contract in North America, not the COMEX one. And he did note in the article that this was very serious. And even if the end game didn't happen back in 08-09, which of course it didn't, it was a really bad signal for the future. And I think we could be very close. And I haven't seen backwardation in gold yet, but we're seeing it in silver. But before we look at David Jensen's article about the current backwardation in silver, I'm just going to read to you one of the paragraphs that I thought was very interesting from Professor Facchetti's article. And it says, I founded Gold Standard University Live 2 years ago and dedicated it to research of monetary issues that are pointedly ignored by universities, government think tanks, and the financial press, centered around the question of long-term viability of the regime of irredeemable currency. So what's irredeemable currency? Well, it's currency that is not backed by anything, that can't be redeemed by a fixed weight of gold and silver. Historical experiments with that type of currency were many, but all of them, without exception, have ended in ignominious failure accompanied with great economic pain unless the experiment was called off in good time and the authorities returned to monetary rectitude, that is, to a a metallic monetary standard, well, there's still a bit of hope of that. There's a lot of talk about gold revaluation and resetting the dollar into a new gold standard, or the world into a gold standard, but I wouldn't hold my breath. It is also worth pointing out that the present experiment is unique in that all countries of the world indulge in it. Yes, all countries have irredeemable currencies. Not one country is on a metallic monetary standard under which the Treasury and the central bank are subject to the same contract law, yes, as ordinary citizens. They're above the law. They cannot issue irredeemable promises to pay and keep them in monetary circulation through a conspiracy known as check kiting. Not one country will be spared from the fire and brimstone that once rained on the cities of Sodom and Gomorrah as punishment of God for immoral behavior. So that's the monetary system we have. Yeah, it's immoral. And I actually think what happened late last year and early this year in the LBMA, and the fact that the Bank of England had to delay spot delivery for, 4 to 8 weeks? They delayed that because there was a run on physical gold. If they hadn't delayed that and fudged things or manipulated the markets, we would have seen permanent backwardation in gold. And I think it's coming, though. It's coming. So let's quickly have a look at silver. And it's interesting because last week, someone that follows me on X, and if you want to follow me on X, it's Maneko64. My handle, though, exact handle is @Maneko1964. Beware that there are a lot of scammers out there who copy me. And yeah, it's @Maneko1964. But yeah, last week, someone that follows me contacted me and said, look at the backwardation in silver. And there was about 12 cents. So the spot delivery contract of April was trading above the May contract. And lo and behold, David Jensen noticed this too. So let's go through his article. It's not as long as Professor Ficchetti's, but I'll put it in the description as well. You can read it yourself. So this was from April 12th, 2025. Silver shortage signal as its price tips into backwardation. In 2025, the short tenor silver lease rate in London surged from near 0% to 6.5%, initially dropped to 3% after the Trump tariff announcement, and is now starting to climb again. On April 10th, the 1-month London silver lease rate stood at 3.8%, according to Rob Gottlieb. Well, who's Rob Gottlieb? Oh, he's a former bullion banker for HSBC and JP Morgan that David Jensen follows. He writes on LinkedIn, so he knows what he's talking about. The shortage of silver can also be in silver's price structure on the CME COMEX, where the silver cash price is surging higher past the active month, May, traded futures price. When the cash price surges higher than the futures price, this is termed backwardation and is a signal that market participants increasingly want physical metal now and are willing to pay for it as opposed to waiting a few weeks. In a word, shortage. And it's very serious in gold and silver because there shouldn't be any shortage, right? Because well, gold is number one in terms of the supply. It's abundant, and silver is number two. So much for the rush for silver delivery in 2025 being driven purely by fear that Trump would tariff silver bars delivered from London. Well, Why does he say that? Well, because it's happening on COMEX. The market shortage of silver can also be seen in figure 2 below, in the snapback in the cash silver price from the initial silver tariff exclusion panic sell down to $28 an ounce to now back above 32 over the past 6 trading days. And he goes on to say at the end, we have signals from both the London and New York silver markets that there is an increasing shortage of silver available for delivery. So there you go. We're going to keep an eye also on the gold basis. The bases for gold and silver are usually positive, which means that the spot price is lower than the futures price, so it's a positive basis. But if it goes negative, like silver seems to be doing, that's very serious, and it's even more serious if it becomes permanent. And Professor Fekete, he said back in 2008 that a permanent backwardation in gold and silver would eventually bring down the whole world's trading system. So it would be a consequence of it. But it's weird because now it seems that the world's trading system is being brought down before the backwardation, but who knows, they could happen simultaneously. And that's why you need to have physical gold and silver, because when these markets go into permanent backwardation, it means the end of this irredeemable fiat currency system. There is a country where there's permanent backwardation, or has been in the last 20 years for gold, and that's Zimbabwe, because their currency was trash. So you couldn't get any physical gold with the Zimbabwe dollar. And I'm afraid it's going to happen to not just the dollar, but the euro, the pound, all the irredeemable currencies, because they're all irredeemable. So I'm going to stop here, and we're going to quickly look at the markets this morning. It's 8:21 a.m. London. We've got spot gold at 32.20. It's up $10. It has been as high as 32.32, as low as 09. Silver's at 32.35, up just about a cent. The high has been 41 and the low 13. The Dow futures is up 90, NASDAQ up 75, S&P up 15, so fairly quiet. The markets, the currencies as well, are not doing that much, so not much to report there. WTI crude, that's up 0.6% at 61.56. High-grade copper is continuing to rally here. We're almost back up to 470. We're at 468, up 1/3%. And last but not least, the US 10-year yield did drop yesterday a little bit. We're now back to 440. It's up 3 basis points. And the UK 10-year gilt yield, well, that's up about 3 basis points at 470. The 30-year is up 6 at 544. So with that, I'm going to wish you all a very good day. Take care. Bye.